Why trying less makes you more profitable. Most traders are not losing money because they don't know enough. They're losing because they are trying to trade too much. They see a breakout, they trade it. They see a pullback, they trade it. The market moves 5 points, and they feel like they have to make something from it. That constant need to participate is one of the fastest ways to turn a good trading strategy into a losing strategy. After years of watching price action, I learned a simple rule. You don't get paid for how many trades you take. You get paid for how well you select the trades you take. Think about an S&P 500 futures trader watching the market during the New York session. Price is moving sideways inside a tight range. There is no clear trend, volume is inconsistent, and price keeps rejecting both sides of the range. An inexperienced trader sees this as opportunity. A professional sees it as information. There is no clean opportunity yet. So the professional waits. Then, price approaches the range high. Suddenly, volume expands. Price breaks above resistance, but the candle closes back inside the range. Instead of immediately buying the breakout, the professional recognizes a possible failed breakout. Now the decision becomes much clearer. If price retests the level and sellers remain active, there is a defined setup with a logical entry, stop, and target. The difference is not intelligence. The difference is selectivity. Imagine taking 10 mediocre trades where your edge is weak. Even if your strategy normally has a 55% win rate under ideal conditions, trading setups outside those conditions can destroy that advantage. Now compare that with taking only 3 trades where market structure, volume, location, and risk to reward all align. Less activity can actually mean better execution. The professional question is not, where can I enter? It is there a reason to enter here at all? That question alone can eliminate a large percentage of unnecessary trades. A common mistake I see in traders is confusing market movement with opportunity. Just because the S&P 500 is moving does not mean there is a trade worth taking. A professional trader separates the two. Price can move aggressively and still offer a terrible entry. The goal is not to capture every move. The goal is to participate only when the probability and risk are clearly in your favor. Here is a practical example. Suppose the Nasdaq 100 futures market drops sharply during the New York session. You see several large red candles and assume the market will continue lower. You sell immediately. 5 minutes later, price reaches a previous support level. Selling volume begins to weaken, and buyers step in. The market reverses, and your stop gets hit. The problem was not that you predicted the direction incorrectly. The problem was that you entered after the move had already happened. A professional trader asks 3 questions before entering. Where is price? What is the market doing at that location? And where is my trade idea invalidated? If those answers are unclear, there is no trade. Now consider the opposite situation. Price returns to a major resistance level after a strong rally. Instead of chasing the rally, you wait. Price tests resistance, volume increases, but the market fails to continue higher. Then a bearish candle closes back below the level. Now there is a logical reason to consider a short. The entry is based on evidence, not excitement. This is what trying less actually means. It does not mean becoming passive. It means removing trades that do not meet your criteria. A trader who takes 15 random trades may feel productive all day. But a trader who waits for 2 high-quality setups may finish the session with fewer trades and better risk control. The professional mindset is simple. If the setup is not obvious, the trade is probably not obvious either. And when the market does not provide your setup, doing nothing is not a missed opportunity. It is a trading decision. The biggest advantage of taking fewer trades is not simply saving money on losses. It is protecting the quality of your decision-making. Every trade creates emotional pressure. After a loss, traders often want to recover immediately. After a win, they become overconfident and start increasing their risk. After several hours without a trade, they become bored and begin looking for setups that simply are not there. A professional trader understands these conditions and does not allow them to decide when to enter. Consider a trader who starts the morning with a clear plan. Only trade when price reaches a predetermined support or resistance level, market structure confirms the direction, and volume supports the move. The first setup fails. Instead of immediately entering another position, the trader waits for the next valid setup. Later, price reaches resistance and produces a strong rejection with increased selling activity. This setup meets the original criteria. The trader takes it. That is controlled trading. Now compare it with a trader who takes 8 trades during the same session. The first trade loses. The second trade is taken to recover the loss. The third is based on a random breakout. And the remaining trades are influenced by frustration and fear of missing the next move. Even if 1 or 2 trades work, the overall process becomes unstable. The professional objective is different. Maximize the quality of each decision, not the number of decisions. A useful rule is to define your A+ setup before the market opens. Know exactly what must happen before you enter, what invalidates the idea, where your stop belongs, and where your target is located. If those conditions do not appear, you stay out. This creates a powerful filter. Instead of asking, "Can I make money from this move?" you ask, "Does this move meet my trading model?" That distinction changes everything. The market will produce hundreds of price movements every session. You only need a small number of them to have a valid reason to participate. The professional trader's edge is often found not in knowing when to trade, but in knowing when not to trade.